Welcome to the latest edition of Share Views with my co-host Stefano Barbaglio, who's Director at Cassiopeia Services, and with our guest, the CEO of SDX Energy, Paul Welch. How are you today, Paul?
I'm great. Thanks for having me.
Okay, well, your company is one of the more favoured companies at the moment. People talking about it, asking me questions. I told somebody last night that I was going to be interviewing you in a host of questions, which we'll go into. But just give us a bit of a background about the company before we get started.
Okay, so SDX Energy is a kind of a combination of two companies, Sea Dragon Energy and Madison Petrogas. We merged in October of 2015. At that point in time, we moved the head office here to London, and then in May of last year, we listed on AIM. And at that point is when we really started to, I think, find our feet and start to build a real significant business. And then last Friday, we ended up buying some very attractive assets from Circle Oil, and that's got us to where we are today.
Right. One of the questions I was asked actually was when you're selling your gas, are you selling near the spot price, or how does that work?
So we sell gas at two places. So in Morocco we sell gas, and we sell it far above the spot price. So there's a local market there, and we sell gas at about an average price of $9 per MCF in Morocco. And it's kind of the opposite in Egypt. We sell associated gas there, and it ranges in price between $1 and $1.60, depending if it's cost or profit gas. So quite a variation across the continent, I'd say.
So overall you're okay. It sort of evens out.
Oh, well, more than evens out, yes. Yeah, particularly in Morocco.
So, Paul, if we go to your asset, South Disouq, what are the chances of success, and what will be the result that you are expecting?
So in South Disouq, we've had this prospect since 2013. We shot 3D seismic, and now we're going to drill a well. The chance of success pre-3D, we've announced it was like 13%. Post-3D, we haven't announced the chance of success yet. Our reserve auditors are going through the process now, and so once we have an independent view, then we'll announce that. But it's significantly increased from where it was, because in this trend, when you shoot a 3D and you have an AVO response that conforms to structure, the chance of success is significantly improved. So we're going to be significantly above where we were with just the 2D data, but until we get the final resource assessment done, it's too early to put a number on it.
Yeah, some investors are also, they would like to know if you are talking to any partners about the drilling for South Disouq.
Okay, we have one partner at the moment who's carrying the bulk of the cost on this well. So a company called IPR is a private company out of Dallas, is our current partner. We put out a press release probably 2 months or 3 months ago now saying that we've been approached to farm out a second time, and we have not farmed out a second time because at the moment all of our costs are carried. So there's no real driver for us to farm out a second time. Now our partner may take a farm out partner, but we'd have no intention of doing so.
Right. I mean, clearly the market's very excited about your company. Probably the difference is that you have a strong cash position compared to, let's say, contemporaries. Could you just describe that part of your?
So, post the combination with Circle, which I'm assuming we're going to discuss here in a few minutes. We have about $42 million of working capital, of which $18 million is cash. So we're in a good cash position there. And then by buying those two Circle businesses, next year we're going to generate $30 million in free cash flow. So we're in a very strong position from not only our existing cash position, but also the cash we're going to throw off from our existing producing assets. When we combined with Circle, we picked up assets that were very profitable, combined with our own pretty profitable assets. So now we are resilient down to $21 a barrel. We make money, including all of our costs, overhead and everything, down to $21 Brent. So we're very resilient in any kind of downturn, and we're very profitable at current prices.
And what's the state of the industry? Clearly we're still recovering from the clear out or the clean out of early 2016 when the crude price collapsed. Are we still in a delicate situation, or is it a fire sale for some operators still, or how is it?
I think it's a combination of the two. Some people who went into the downturn in good position have come out in good position, like ourselves. We went in with essentially no debt. If you went into the downturn with a lot of high-priced debt, particularly in the RBL side, I think a lot of those companies are still in a very difficult position. Circle was one of them, and so that's why we got the assets at a very good price. So I think it's a mixed bag at the moment. Not everybody's doing well, but most people are doing much better this year than they had in previous years, ourselves included.
And coming back to the Circle deal, I would like just, if you would like to tell a little bit more about what this deal is going to add to your company.
Okay, so we bought two producing assets from Circle from a pre-pack bankruptcy process. We paid $30 million for these assets. The assets themselves are worth probably closer to $70 million. we paid 39 cents on the dollar for the debt, and we took them debt-free. So we bought 40% of the Northwest Gemsa field in Egypt, where we previously had 10%, so now we have 50% of that field. And then we bought 75% of a Moroccan gas business, where the other 25% is owned by the state. So those two assets gave us an additional 3,500 barrels a day of production, an additional 6 million barrels of reserves, so now our total reserves are 12 million barrels, and our current production is just under 5,000 barrels a day. And as I said up front, it increases our cash flow by picking up those two assets by $21 million per annum for 2017 and 2018. So it was a very accretive, very attractive proposition for us.
Right, and in terms of you're operating north of Africa, we've had the Arab Spring and other things like that. What's the political situation there at the moment?
Well, we'll take them separately. So in Morocco, the situation is very good. It's a monarchy. Everything works well. They didn't really suffer too much from the Arab Spring. In the case of Egypt, we've had a number of regime changes. The current regime is headed by President Sisi. When he came in, he really stabilized the situation. He started to pay people back, so the receivable issue has decreased. And then I think he rightly took some strong medicine and had done a number of things. He's reduced the subsidies. He's improved tax collection. He's increased his foreign currency reserves, his hard currency reserves, and then most importantly, he removed currency controls. He allowed the pound to float against a basket of hard currencies. They took a significant devaluation, but that improved the dollar liquidity in the country. And so the pace of business, the things you can do there, our ability to convert Egyptian pounds into hard currency has dramatically improved. So
it's like a normalization.
It's headed in the right direction. I think that they're really doing the right things to give themselves a much more stable and secure business environment as we move forward. Yeah.
So some investors, they are asking about dividends. So would you be considering to pay dividend after South Disouq come on stream?
Well, maybe after South Disouq comes on stream. I mean, at the moment, we see so many good opportunities out there that I think our cash would be better used to pick up new opportunities to grow the business from there. But, you know, a successful South Disouq well will put us in a different league than we currently are, because we're talking about anywhere between 50 and 100 million barrels recoverable. After the development costs are paid, then, you know, we'll have a substantial amount of production, you know, in the order of 25 to 30,000 barrels a day net to us. So at that point, we could potentially start talking about paying dividends. But at the moment, we're still in growth mode. We see a lot of opportunities to use our cash to buy distressed things like Circle. And so that's where I think our cash is better used in today's environment.
Without wanting to flatter you too much, it seems that you've got, you know, you're a wise old head. You've been around the block. You're not an exploration company which is working on a shoestring. Why do you think so many of your contemporaries, you know, go, let's say, the wrong way? It's difficult for investors, difficult for them, underfunded. Everything is left to chance. What's the difference there?
I think it's a cyclic thing, because when the market is very hot and the prices are high, it's difficult to buy assets and do transactions like that and to grow your production. So people focus on exploration, because given a small amount of success in exploration, you can get a very, you know, significant improvement in your return. So I think you just have to be able to have the right combination. So the way we view it is that we produce enough cash flow to essentially pay for exploration. So in any kind of downturn, we're not totally exposed to the drill bit to have success. So, you know, we try to pay our bills. We use a portion of our cash flow to get into exciting opportunities like South Disouq, like things we're going to do in Morocco. So it's just a matter of discipline and, I think, balance to a certain extent.
Is this going to be a transformational year, as they sort of say?
Well, I said that on the TSX and I got in trouble. So it'll be a very important year.
Kiss of death, you said that.
It'll be a very important year for us. You know, given that what we see, the growth that we expect in Morocco and potentially in Egypt with South Disouq, it will be a very important year. It's already started out great, because we've improved our cash flow, we've improved our production by over 250%. So, you know, whatever happens, I think it's going to be a great year for us.
Cantor came up with a target price of 78p. Now, what are your comments on the current share price, which is basically half, less than a half?
Yeah, I think it's one of those things where the market discounts small cap E&Ps because they're concerned about your longevity, and you have a significant discount to your core NAV. So I really do think we're undervalued, but I also think that's a combination of factors. One is the market, and two is just the fact that we're new to the exchange, we're new to investors, so we haven't had the ability to talk to you, to get out and talk to investors, to make our case. And so I think as we do that, and as people, get to know us. And as we deliver on what we say we're going to do, we think that gap will close. So hopefully that 78 price will look, quite small in the distance. But I think everybody's suffering from the same thing. I don't think we're unique in that sense. But it's my job to get out there and tell the story and to make sure that we do get a fair value for our shares.
Paul Welch, CEO of SDX Energy, thank you for telling us your story. That's it for Share Views. See you again next time.